Hey guys, hello, Lance Martin here, Coldwell Banker Town and Country, presenting our December Market Snapshot, the last one of the year, and things have gotten a little interesting since we last spoke. So again, I am Lance Martin, your host for the next hour or so. What am I talking about? The next 25 minutes. So let's jump in. Before we do, first of all, happy holidays, Merry Christmas, Happy Hanukkah, whatever you happen to celebrate. So I hope you have had a wonderful year and are going to take some time off and enjoy it. I went ahead and threw a couple of logos on top of my little holiday theme here. It's something, honestly, we haven't really done, and for a long time I've thought, Lance, don't turn this into a commercial, but the reality is I am losing business because I've got people that are following me and not actually realizing who we are and what we do. So at any rate, here's a 10-second commercial. Hopefully you know we're Coldwell Banker Town and Country, and we do property management under Cobalt, and our escrow is Cobalt Escrow. And then last but not least, this logo isn't finished here. I just played around with this, but my son Drew and Drake and I, we are the Martin Group. So if you need to buy or sell anything, come see us. All right, back to business. So let's jump in. I was just talking to Adam about our 2024 forecast. It will be in March. We are more than likely not going to be doing a live event at the Fox Theater, at the Doubletree or something like that. The logistics of that have just gotten difficult and, quite honestly, extremely expensive. So more than likely what we will end up doing is what we did the very first year of COVID, and quite honestly the second year of COVID and the year after COVID, where we're doing highly, hopefully high quality in-studio interviews and presentations, and then we will roll them out in the month of March, give you guys plenty of time, and at the end of the day, I think the content, ultimately the delivery will be a little bit better. Unfortunately, we might miss some of the face-to-face stuff, so that's where my head is right now, but save the date for March. Same QR code that we always use. All the slides here are on the deck, so if you're pulling this video off of YouTube, there's a link on YouTube, Facebook, Instagram, all the rest. You can follow the link. You can get the exact same slide deck that we have, or you can follow this QR code throughout. So we got a little bit of news I want to talk to you about today. A couple of things. Of course, wouldn't be a market snapshot without us addressing Chairman Powell. So this is the deal. I threw up a couple of tweets or some posts from X, if you will, from a couple of sources that I rely on, that I trust. This one actually is from this morning. Rick Reeder from BlackRock was on CNBC this morning, and I just pulled him up, not necessarily because he's my go-to guy, but what he was saying, I believe. In other words, the consensus about where we are with interest rates as it relates to mortgage and what the Fed funds rate's doing is we might be done. We talked about it last month, and it appears as though there seems to be consensus forming around that. The data seems to point to that. Maybe there's going to be another quarter point increase to the Fed funds rate. It doesn't feel that way, but the consensus that I am forming around is we may actually start to see rate cuts at the Fed level, sometimes first, second quarter, mid next year. Having said that, we've already seen some improvements in interest rates, which we will talk about in a minute. I got another little post down here from Logan. I can't pronounce his last name to save my life, so I'm not going to try. Logan is the chief economist for Housing Wire. I really like him. He is very, very good. Matter of fact, I would recommend all of you, I'll give you his stuff, but if you want to get some daily updates on what's going on in the market, follow Logan on Twitter or X or whatever we're calling it these days. And he's basically also in effect saying he's expecting to see some Fed rate cuts at the Fed level, which again will translate down to the mortgage side, which is good for us. We're already seeing it. More to follow on interest rates when we get to the end of our presentation. A couple of other little things I pulled up. Both of these are from Housing Wire. I pulled this one up because, again, I believe that we're going to see. Matter of fact, not only do I believe we're going to see this, we might actually see this before the end of this week. Today is December 4th. Well, Adam will get this turned around. I'll probably have it posted tonight or tomorrow, actually probably tomorrow. Basically, if you can't read what this is saying off the screen, rates may fall below 7%. We're in the low sevens right now. Dramatic interest rate improvements as it relates to mortgages just since we last met, which wasn't really a month ago. We shot the last month's November snapshot a little bit late in the month. So I was actually in studio with Adam 2.5 weeks ago, maybe 3 weeks ago at the most. So at any rate, I believe this to be true, that we're going to start to see interest rates improve on the mortgage side. I was quoting other people earlier this year that said we'd be below 6 into the 5s. All of those were wrong. We've been talking about that regularly. By the way, this isn't a huge stretch to say we're going to be below 7%. Again, we're almost there. We could be below 7 by tomorrow, Thursday, or Friday, depending upon what the bond market does. Another quick thing, and we'll talk a little bit more about this when we get to the interest rate section, is if you guys are really junkies for this stuff and you're like, Lance, I'm confused, all you really got to do is follow the 10-year bond. If you follow the 10-year bond, that basically correlates to what mortgage rates are doing, and then you don't really have to pay attention to too much else. The 10-year bond has been improving. I guess if you're us, it's been improving, and that basically is one of the reasons that we've been seeing improvement in interest rates. There's just another little slide over here. If you're in the market to buy or maybe even sell, FHA and Fannie Freddie loan limits were increased last week. So what does that mean? Well, if you were stacked up against a loan limit and you're like, well, geez, if I don't want to get too far into the grass, but there's what we call conforming loans and what we call jumbo loans. Jumbo loans are larger loans, larger dollar amounts. If you're right in that middle spot, sometimes that can be problematic because you would prefer to get a conforming loan necessarily than a jumbo. Well, anyway, they raised the loan limits fairly substantially. So if that is something and you're in the buying market and you've been told you're right on the cusp, am I going to get a conforming loan or a jumbo loan? Call me and we can help you out with that. So let's go ahead. Oh, one other thing before we jump in, I wanted to address the crash because especially this time of the year, guys, it's basically been throughout the last couple of years is, oh, real estate's been too hot, too much, too fast. Not necessarily false statements, but then they're tying that into, oh, the economy is slowing down, which quite honestly it is, but this economy is still hot. I mean, it's a wonderful economy, quite honestly, unless you're trying to sell real estate or do anything in the real estate sector, not so hot. But the rest of the economy actually is doing pretty good. And anyway, I want to talk about crash, okay? So if you are in the camp that says real estate values are going to crash, therefore you're staying away from real estate or you're not going to buy. Again, I have another quote up here from Logan. Obviously, I've got Logan on the brain here today. But I think this is a very simple way, and I subscribe to this completely. And I have subscribed to this for 18 months since we've been in this kind of interesting little marketplace where rates are going up, things are slowing down, inventory is low. But basically, I'll just read what Logan put on X today. Remember, in the future, and he's talking specifically to people that are calling for a crash or expecting a crash for whatever reason or whatever information they're looking at. Remember, in the future, when stressed inventory, and stress, let's just call that inventory that's under some sort of a problem. I can't make my payment, or maybe I'm going through a divorce, or I lost my job, or whatever it happens to be. And again, in theory, that translates into potentially a foreclosure or something like that. So stressed inventory happens in housing. It will be easy to spot as new listing data is at all-time lows, which is true. And quite honestly, I have to skip ahead in my presentation. Oh boy, yes, all-time lows, so we can confirm that in our marketplace. And anyway, since it's at an all-time low, this data line should explode higher, but it's been trending to the lowest levels ever in 21, 22, and 23. So what Logan is saying, and why I agree, and I have not been calling for a crash, I've been saying, no, we're not going to crash, and there's a whole bunch of reasons, and part of it is inventory. So we have our version of this chart that Logan is presenting, and if you can see it down here, this is inventory, very, very, very low. He's basically saying not only is it going to increase, it is going to dramatically explode on the upside. So this is the deal. I track this stuff every day, and I'm going to see it explode. And if it starts to explode, I'll come back to a market snapshot when that happens and say, oh, guess what? We're seeing some very interesting stuff. We're seeing new inventory explode, which, by the way, the flip side of that would also mean there's no demand for it. So inventory going up, that in itself isn't a problem. I would love to see inventory go up. At our current level of demand, inventory could double, probably even triple the number of homes that are available, and there's no crash. So I don't know what a tripling of inventory would look like on Logan's chart. In theory, maybe that could look like it's exploding and therefore a crash is coming. Not in our market, but we'll see that. And I've got some friends and people that follow me that are like, Lance, you're wrong. They've been telling me I'm wrong. So far, I haven't been wrong. But again, I subscribe to what Logan is saying. When we see huge amounts of inventory increasing and there's no demand, by the way, boy, Lance, tell us something that's, ground shaking. It's pretty simple stuff, guys. And this is why I have been in the anti-crash marketplace for quite some time, because the supply and the demand just isn't there. So anyway, so let's jump in. So again, Inland Southern California market update. Let's take a peek. We're going to take a look at our charts. I've got them combined. I've been doing this is my third month with the new charts. I'm still not 100% sure I'm going to stick with this format, but anyway, here we are for now. So let's take a peek at it. So this is median price, 5 years, LA, Orange, Riverside, San Bernardino counties. So if you just want to summarize the pricing, up in Orange County, flat in LA County, up in Riverside County, and down in San Bernardino County. However, I just did this 3 hours ago. I was debating on whether to put a down arrow in San Bernardino County or just put flat, because it's down like less than 0.5%. I mean, it's basically flat. And LA is actually flat. I mean, it's exactly the same as it was a month ago. So there's our 5-year pricing chart. Let's take a peek at what that means. This data is live. I'm not clicking on this, but if you guys want to click on it, grab the presentation, click on this link. Everything is there. It's all updated like I've been telling you now for 3 months. That's the one thing about these charts I really, really like, because if you want to explore this information on your own, you can take a look at this and you can do it anytime you want, and it updates live in real time. Okay, so what do we have here? So in median price, LA County $940, Orange County just under 1.3 million, a little over 600,000 in Riverside, and a little over 500,000 in San Bernardino from a pricing standpoint. This is what we're looking at. So prices in LA County up 7.4% year over year, November to November, okay? Orange County, 17.7% increase year over year. Now, some of you might be like, wait a minute, Lance, it just didn't seem like it was that long ago that we were talking about prices falling a little bit or very small appreciation numbers. So remember that 17.7 positive number in a couple of minutes. We're gonna dive a little deeper into that. Although, if you're like, Lance, I don't care about Orange County, it doesn't matter. When I'm going to share with you Orange County, it applies in the other counties as well. Just a little bit of variance. Riverside's up 6.5% from a year ago. San Bernardino's up 8.6% from a year ago. These are the numbers. This is 5 years ago. I've been having my little, graphic circle that since we used this presentation. I might get rid of that. I'm just, again, I guess for some reason I'm accounting as 2019 as the last semi-normal year. A couple years of COVID and then a couple years of coming out of COVID and what we've been going through for the last 18, 19 months with rate hikes, et cetera, et cetera. So bottom line, median price is fine. So let's go back to the prior slide about a crash. Well, nothing crashy about this. If anything, the numbers are still pretty darn positive. Again, that 17% number in Orange County is a little troubling. So here's the 15-year chart with the median price. We just talked about Orange County with that 17%. So I am going to click into this. You guys, again, you can do the same thing at home. And even though it's specific to Orange County, let me blow this up here a little bit. So when it says there's a 17%, that's the big red one up here. Okay, so what we're looking at over here, that's October. Let me move my mouse over just a smidge. Okay, so here we are. Second one is Orange County, $1.2775 million. Let's just call it $1.3 million. So Orange County, and frankly all these counties, but let's say Orange County, 17.7% up. Well, let's go back to November, and there it is. So I'm going to take my mouse off here in a minute, but you can see here Orange County was $1,885,000. So from here to there, that's that 17% increase. Let me just drag the mouse off here so it's not in the way. So the reason I think this is important, and it almost kind of gets back to the crash theme, and I don't want there to be a crash theme here because this is the crash that didn't happen, or maybe this is the crash that kind of started and then didn't happen because the inventory and frankly the interest rates that were supposed to slow things down actually didn't slow things down. All the higher interest rates did was lock down inventory, which kept the supply, I guess, artificially low. It didn't stifle enough demand. So what we saw here, these are basically all these peaks in the marketplace. And this goes back basically to March, April, or May of 2021, okay? Or excuse me, 2022. And then we just started to see prices collapse and collapse and collapse and collapse. I don't like the word collapse, even though I just said it 4 times. We start to see the prices pull back. This was the consumer basically adjusting to higher interest rates. Oh no, what's going on? We went from a 3% and now we're at a 5%, now we're at a 6%, now we're at a 7%. And then as inventory started to tighten up, which is basically, it's just tightening up as this is going down, buyers said, hey, I still got to buy. I need a bigger room for my kid, or I still need to move next to mom, or I got a job transfer. And then we just started to see all of this appreciation running back up, which was backfilling all of those numbers. So when you have such a large number in Orange County, which by the way, Orange County fell quite a bit. It fell quite a bit. So that November to November number is just backfilling that number. It's not a 17% increase on where they were at the peak. As a matter of fact, they're still not quite exactly where they were at the peak when values were, which just for the record, what was that in Orange County? April of 2022. It's going to be a little different. Riverside County might have been May of 22. San Bernardino County might have been another time. But as you can see, they're all basically in line, which is why doing these counties kind of as a group, it doesn't really matter. Oh, I'm Orange County, I'm so different than the Inland Empire. Well, your prices are a little bit different, but the trends are not. Okay, so let's carry on. Let me get back into my presentation. Every time I click out of these things, I sometimes have some formatting issues. Let's see. Oh, looks like I'm going to successfully re-navigate back. So here's your 15-year chart. Again, we covered the 17% in Orange County like we had discussed. So now let's get into the supply and demand for the 4 counties. I haven't talked about this yet. The listing and transaction trend continues. And what I mean by that, I pulled this slide up here, I think for the first time last month. Previously, I had a girl kind of looking off a ledge into the abyss, and I said, inventory and listings are trending downward. This is my new slide that says they're trending downward. However, if you see my little quote down here at the bottom, that's not all that unusual, okay? To have listings basically trend downward in September, October, November, December, even January and February, that's not crazy. Now this trend is dramatic, but nevertheless, the listings are trending down, the pendings are trending down. I will tell you though, as interest rates have improved just over the last couple of weeks, because we've seen anywhere from 0.5 point to almost 0.75 point improvement in mortgage rates for the buyers, loan applications are starting to increase. We're starting to put more listings in escrow. That's actually not usual. That's not normal for the late November and December. So we'll see. Normally people kind of check out. Hey, it's Thanksgiving. I think I'm going to relax. Hey, the holidays are coming up between Christmas and New Year's. We'll re-enter the real estate market in January or February. So we actually have some people that are in it now. So what are we actually looking at? All 4 counties are down as far as new listings are concerned, and they're down pretty dramatically. I mean, it is what it is. 4%. Actually, this number is wrong. I apologize. I didn't update that. Let's go to the next slide. I think I have it. Here we go. So here we are, November listings for the 4 counties, down 5% in LA, down almost 10% in Orange, down 5% in Riverside, and 3% in San Bernardino. Now those numbers might not seem that large, but again, we're comparing them to last November. And again, if you go back and watch my snapshot from last November, I was like, oh my God, we don't have anything to sell. So we're lower numbers than numbers that we didn't like before. As Logan had said in that slide that I put up from his post on X or Twitter, these are all-time lows for new listing inventory. So you can take a look at these if you want, but anyway, the numbers are down as I've indicated. This is the 15-year chart on new listings, and again, if you just kind of go back and we see this spike, we've been talking about it for the last couple months, this is about as low as it gets, all right? Are we going to trend a little lower in December? I don't know. Last month I said I thought it might be possible that we actually would see some flattening or maybe even a little uptick in listing inventory. Completely wrong, completely wrong. These are just dramatic drop-offs. So we'll see if we flatten in December or not. So at any rate, here's your 15-year chart on new listings. You can click into that and take a look at it if you'd like. Pending sales, again, fewer listings, fewer buyers, but those prices were up. So these are look at those all 4 counties down, open escrows, buyers and sellers coming together in the month of November. So I mean, that was kind of a rough one. So what are we looking at here? Oh my gosh, LA County 30% down, Orange County 42% down, Riverside 21, San Bernardino 23. These are huge numbers in fewer transactions, buyers and sellers coming together, transactions getting opened. The reason they're so painful is last November, the numbers were huge as far as the transaction volume. This is why people like me and real estate offices and agents and escrow and title and mortgage are just like, oh gosh, can we finally kind of get into some sense of normalcy, get some stability on interest rates? Those are really rough numbers. Having said that, if you have a property to sell, we're still getting multiple offers. Matter of fact, Drew just put a condo in escrow. We had the thing listed for, less than 4 or 5 days, multiple offers, ended up selling it all cash at price. You know, again, all cash, didn't have to get a loan on it, so maybe that factored in. My sales meeting in my Covina office last Tuesday had multiple listings that had been on the market a little more than a week. So I'm like, oh, maybe our inventory's sticking around for a little bit longer. Yeah, more than a week, I know, it's crazy. And I had 4 of those listings that we thought were frankly on the market more than a week, and every one of those agents was like, nope, I've actually got multiple offers. The only reason we haven't put it pending yet is because we're working on a counteroffer going back and forth. So if you are a seller, I'm telling you, your prices are still solid, and we can find a buyer and connect this very, very quickly. Frankly, if you're on the buy side, it's still a little challenging, but not as much competition as you had before. So those are the pending numbers. Here's the 15-year chart on the pendings, and again, you can see a minute ago I kind of showed you the graph on where the listings were. This is even more dramatic. Oh my gosh, let me see if I can stay in the shot here. Look at this red arrow here. Red's Orange County, number of pending sales. That is definitely the lowest number of open escrows that we have had in the 15-year chart. Same thing with every single one of these counties for open escrows. Wow. I mean, assuming you guys know how to read these charts, that is a brutal one. Spotlight City, I left up Riverside for you. I left up Rancho. We did that last week. I decided to do the city of Lakewood. Lakewood is home for me. I basically spent the first 18 years of my life in Lakewood. I have some friends and family there. And by the way, we can sell your house in the city of Lakewood if you need some help. So what do we got here? A price in Lakewood. Clicking into my charts, here we go. What do we see? Well, we see basically that values have, my mouse is locked up. Oh, no, it hasn't. Sorry about that. So we have a median price in Lakewood of about $445. Wow. It's gone up a little bit since I was there last. So there's your Lakewood median price. Let's take a look at listings. Listings down in Lakewood. By the way, what does that even mean? Lakewood's not that big of a city, but it's not a small city either. 38 listings in the entire month. That's rough. I do not know the answer to this, but I can guarantee you there's a lot more agents in the city of Lakewood than 38. There's probably 300-400 agents that are working in the city of Lakewood proper. That is brutal. And what do we got for sales? These are the pending side. So is any buyer? Oh my gosh, look at that again, just like the other. This is why you look at these charts, and I could pull up Rancho again, I could pull up Riverside again, pull up your city, and I'd be happy to get those to you. They're all very, very similar, guys. There's very little variance, although there can be some, and there's some pockets that are a little bit different. So getting back to the actual presentation deck. So we've got Lakewood in here. I am going to take these slides and we're going to move them onto the archive section. But anyway, for now, we've got it here. Let's talk a little bit about interest rates, and then we're going to wrap up and get out of here. This is from Optimal Blue. I've highlighted this, and I've been kind of talking about this theme for 18 months now. But we actually have some positive news. Last month we didn't, or we thought we started to see some improvement, and then we were back up here. So again, the theme of today, I guess, is rates of good, and maybe we're going to see an interest rate sub 7%. For those of you that really follow along on this, a year ago's market snapshot, not the one we did last March, but the one before that, I said the real estate market breaks at a 7% interest rate. Well, I don't know if it completely broke, but it certainly is bruised and battered at a 7% interest rate. And frankly, a month ago we were at basically 8% interest rate. So nothing would make me happier to see a sub 7% interest rate, because then, to use my breakage analogy, I think maybe we can actually start to heal a little bit and we can put this thing back together here and start to see some more of a normal marketplace. So right now we're basically at a little bit above 7. This is optimal blue. If you just went onto the old Google machine, I just plugged in a $500,000 loan, 20% down, 750 FICO. They have it at 7.5. Maybe, maybe not. I don't know. Like I've said multiple times before, it depends on you and a lot of other things. I've given you guys something, for some of you guys that are real junkies, I've got a new link here for you. You can click on this link. This will take you to Mortgage News Daily. I don't have my phone with me. It's over there on mute on my bag. But there's a Mortgage News Daily app, or you can just come here. And it's probably the easiest way, that's the most accurate to track what's the bond market doing and how is that impacting mortgage rates. So if you're in the market to buy and you're tracking these things, instead of going to the old Google machine, come to me, click on this link. It's going to be very, very accurate. And of course, we'll connect you with a lender who can help you out. So I've become a huge fan of Mortgage News Daily, and that's where I'm getting my information, so you can get it there. I've already mentioned our market forecast is coming up. So that is our December 2023 Market Snapshot. I hope you guys have a wonderful holiday, and we will be back here in January to do it all over again. Have a good one. Bye-bye.